I think this venture capital is misunderstood from the outside. Right? I think the general notion of venture capital is we have a few meetings with entrepreneurs, one or two meetings, and we cut checks or we make bets, etc. At least for me, that's not the fun way of doing it, and it is a lot more nuanced than that. I think venture capital, if I were to summarize, what it is, I think it is about making qualitative assessments of the future with very little information at hand in a short period of time. And if I were to translate that into what good VCs do and the skill sets that they have, one, I think good VCs have the ability to assimilate a lot of information about markets quickly and make a strong point of view about the future, right? And about where the markets are trending, so to say.
Hello everyone. Today we are back again at PM School's Minimum Viable podcast. This is episode 12. This is the first time we have a very different type of guest. We have had product managers on this podcast. We have like product leaders. We've also had a bunch of founders. We had like a behavioral scientist. And this is again a totally different domain. We have our first VC guest, someone from the VC world. Welcome, Saketh. Welcome to the podcast. Before I sort of want to, obviously, obliged to give you an introduction, but I would love to have it from your own context, because we've known each other for only for like 2-3 months. I think we just connected in November or December. So I would love to have your background from your own sort of story before we jump into the questions.
No, thanks so much for having me, Nikunj and Ankit. Hopefully, this conversation is useful to someone out there. I work as an investor with Chiratae Ventures, investing largely into consumer tech companies at the early stage, at the seed and Series A stages. Prior to this, was a product manager and an entrepreneur after graduating from BITS Pilani. So that's a brief background about me.
Awesome. Sakit, welcome to the podcast. And coincidentally, three of us are Bitsians. So this is almost like a Bitsian reunion, right, from different batches. And great to see another Bitsian doing, great in the VC world. Somehow, Bitsians, I don't know, we are becoming infamous for becoming product managers and VC, VC guys, right? There is something about, Bitsians doing well in both of these field. And again, I want to talk about your journey to becoming a VC, because when I graduated, we didn't even know this term existed. Back in 2011, here VC path we follow kar sakte hain, right? Or even a PM path you could follow. But you have had a great journey in product, and then as a co-founder, and then as a VC. Talk to us about that journey and the reasons, some of the choices you made along the way.
Sure, yeah. I think my journey to being in VC and being at Chiratae is anything but a straight line path. And like you said, I did not know what venture capital was even maybe a year or two after graduation, right? So I think I'll lay out the quick context of how this happened. In my final year at BITS Pilani, I did an internship with an incubator called National Entrepreneurship Network. A lot of the notable unicorns today were seed stage companies or pre-seed stage companies incubated at NEN. And this was 2015. So very early on, I got the chance to surround myself with these entrepreneurs. Back then, I think the ecosystem was still a little bit nascent, but about to take off in a big way. I think that was my foray really into the startup ecosystem, and I think initially subconsciously and later on very intentionally during that internship, I realized that this is the ecosystem where I want to spend a lot of time. And I think that distilled itself into wanting to be a founder, but I didn't know how to do it. And when I spoke to people, I had the luxury of being in this incubator. So I realized that becoming a product manager would probably be a good start to wanting to start a tech business. It would give me the right skill set. And hence my first job was as a product manager in a software company called IMI Mobile. I was part of the team that built out a vertical called IMI Connect. This was a Sequoia funded company, which later got acquired by Cisco. And so was a very valuable experience to build an omni-channel, communication software for banks. Within a year, as per plan, I quit. I started off my own company. It was called Infield. This was booking platform for recreational sporting facilities, something like a Play or a Fitso that do it well today. At its peak, it was doing about 150 to 200 bookings per day across 3 cities. But we soon realized that in order to give the best experience to users, you need to have control of your supply and have captive supply. And that required a completely different mindset. We weren't the best people to do it. We weren't able to raise that kind of funding, etc. So we realized that it's time to stop that, and that is when I transitioned into VC. I think I started thinking about VC around this time when I moved out as a founder, because of a few reasons, right? I realized there are a few blind spots that I have as a product manager, as an entrepreneur, which were understanding the right markets to build in, uh, deciphering market trends, surrounding myself with entrepreneurs just to understand what makes the best entrepreneurs tick. I think I really felt like a stint in a VC fund would, give me the kind of exposure and the experience that I wanted for the long term, right? And hence, found my way into a global venture capital fund, which was investing in a niche vertical of consumer brands. And after being there for about a year, realized that, hey, like, I kind of enjoy this. I could be good at this. And Chiratae was at the cusp of raising a $340 million fund, and that was when I joined Chiratae. And it's been 3.5 years for me here. I think just to complete the answer, right? You asked me, how did I make some of these choices? I think a lot of these in that moment felt like hard choices because I was very invested into my first job, into my entrepreneurial journey, again into my first job as a VC, etc. But I think all of those came with cutting learning curves which I felt were linear for more exponential ones. And I felt like a combination of all of this resulted in me being here at this point.
Awesome. Yeah.
Thanks, Saketh. Obviously, that's one way to obviously get into it. But let's say today, if someone who's looking at this podcast episode, and I've had a lot of friends also ask me, and this is something that I'm not super clear on. What are the skills that one should be developing to like get into like a VC role? Like think of someone who's maybe like fresh out of college, or maybe it's an entrepreneur who's had like 2-3 years of experience and he's trying to sort of apply to VC firms. I see a lot of these roles like associates, or let's say even beyond like a senior role. Do you think there's like a set of skills, or if you can sort of lay out a path of sorts?
Yeah, I think this venture capital is misunderstood from the outside. Right? I think the general notion of venture capital is we have a few meetings with entrepreneurs, 1 or 2 meetings, and we cut checks or we make bets, etc. At least for me, that's not the fun way of doing it, and it is a lot more nuanced than that. I think venture capital, if I were to summarize, what it is, I think it is about making qualitative assessments of the future with very little information at hand in a short period of time. And if I were to translate that into what good VCs do and the skill sets that they have, one, I think good VCs have the ability to assimilate a lot of information about markets quickly and make a strong point of view about the future, right? And about where the markets are trending, so to say. Now, this happens in a few ways, right? Like you build a lot of context from secondary research and from adjacencies, from looking at companies that are ahead of the curve, public markets. You try and see if there are transferable learnings from other geographies. But more importantly, the ability to be very close to the ground and get insights bottoms up about the realities of the market, about a particular industry, and the ability to do this quickly, assimilate all of this information, and put a flag in the ground and say that this is potentially how this will trend, and given the information that we have right now, this looks like a good investment to make, right? And doing all of this is potentially, I would say, a very important skill set. Second, of course, at especially the stage that we invest in, which is early stage venture capital investing, a lot of what I'll be talking about today is specific to early stage venture capital, which is a little different from what happens at the growth stage, which we can cover if need be. I think at the early stage, founders and evaluating founders is very important. And what this comes down, this is obviously a subjective call. It takes decades for VC investors to make two or three good calls about the right founding teams. But I think it comes down to a skill of interviewing and the ability to form a relationship with people, for them to be vulnerable around you, for you to really understand their core motivations of why they're building what they're building, for them to understand why they are co-founding this together. What is the reason they think they can work together for a very long period of time, and also understanding why they want to solve the certain problem that they want to solve, right? Like a combination of this really gives you an insight into if this is a founding team that you want to back. Three, I'd say, good VCs and a good skill set for a VC to have is to understand one or two sectors very well. This helps you have conversations with entrepreneurs, which brings me to, the next point, which is I think the best VCs do have the ability to form good relationships in the ecosystem with the best entrepreneurs, maintain those relationships, and also with, their co-investors and VCs. I think a combination of these, and to reiterate, I think, just if somebody were not in the VC world and were looking at, how, what are the skills that would be needed, would I enjoy this, etc. I think, can you go deep into one or two sectors? Can you assimilate a lot of information quickly and make a call about a particular industry segment or a company to say this is a good or bad investment? Do you enjoy talking to, even from the outside, you can do this, right? Do you enjoy talking to good entrepreneurs, networking with them, with good VCs? And I think a combination of this is the right skill set. Ultimately, a good VC is determined by being contrarian and being right. And being contrarian comes from understanding markets and customer insights very deeply, and making a call, and as well as a trained gut, if I can call it that, about founders. And obviously this takes time, and as one of my mentors says, it is hence an apprenticeship job, and you can only learn most of it once you're inside.
Awesome. Saketh, you mentioned about your own journey, right? That right after college, you were a product manager, and then you were the co-founder, and then you transitioned into venture capital. So could you share some insights on the typical hiring process, at VC funds? Where do VCs typically scout for talent, and what qualities or experiences do you look for in candidates?
Yeah. I think the best VC funds orient themselves towards excellence in any field. At the end of the day, a VC fund is a set of people sitting around a table making judgments about a certain company and founders, etc., and determining if they want to partner with them, which means the diversity of judgments and the diversity of thought processes is very important, which is why most venture capital funds will have different archetypes of people around the table. Typically, these would be ex-entrepreneurs who've built in a certain domain. They obviously come with their own network. They understand. They're able to, empathize with other founders better. Second, ex-operators. This includes product managers, marketers who worked for good companies and have seen steep learning curves in those companies. And third, ex-consultants, people who've worked in consulting firms who can do a lot of structural top-down thinking and strategically align with the board. I think in terms of hiring process, what VC firms typically test for is three or four things, right? One, in the initial stages when you have conversations, your ability to communicate well and have concise thoughts about industries. Two, your ability to build perspective about industries and specifically understand if there are investable opportunities. I think the gold standard is if you can come up during the interview process at some stage and say that, hey, this industry looks interesting because of these trends, and this is a potential investable opportunity. I think that is really the gold standard that people are looking for. And I think in terms of the hiring process, the other thing that becomes very important is, the first 3 or 4 years, that any VC fund invests into a professional working with them is basically an investment they are making. Really, the advantages of somebody growing through the system and learning about this craft are very, very far ended in terms of time, and hence, given these are long time commitments you are hiring ideally people for, people want to understand, VCs want to understand the touch points that you had in the past, expect them to have conversations with people that you worked with, spend time with them to understand your strengths and weaknesses. But ultimately, I'd say, a combination of these, right? Understanding markets, just being very clear and concise about what you've done in the past and what you can, an awareness of what you can bring to the table, and the gold standard really being, hey, like, this is potentially a good investing opportunity, is typically how hiring processes run.
Got it.
I have one follow-up question, and I'm not sure if this is too relevant, but one of my observations has always been that the at least the analysts at all the VC firms are coming from a tier one college background, right? They're either from IITs or BITS, right? At the analyst level. So let's say someone who is not from those colleges, and he or she wants to break in as a VC analyst, how to go about it, right? Because see,
Yeah.
obviously college does provide you access, right? And that's why we go to, let's say a top tier college to get access, right? But let's say someone who's really smart and did not go to these colleges wants to break in as an analyst at the top VC firms like yours or Sequoia or other firms. How to go about it, right?
Yeah, no, great question. I think two ways to go about it. One is to work in good startups as an operator, because then people, the signal that you're giving is there is some excellence that you're aligning yourself towards. You're surrounding yourself with the right people, and you're doing some good work there. Second is, putting your thoughts out there uh, about industries. I cannot tell you the number of times I've read random blogs by people that I did not know, and I learned something very insightful. And this happens not just with me, with people across the ecosystem, not just with analyst associates, VPs, but also with partners. So they do realize, if you're putting out content, if you're putting out stuff related to a certain sector, I think ultimately this will get to the right eyeballs. Lastly, get yourself into ecosystems and events where you would find good founders and good VCs. Try and understand who these people are, what are they looking for, etc. And it more and more, it's this is changing, because number one, your best entrepreneurs are not just coming from tier one colleges. Two, I think your ability to do a lot of these things, work in startups, put content out there, put yourself out there, is way more important once you join a venture capital fund than just having the brand for tier one college.
Awesome. So that's essentially the advice which we also give to people looking to break into product if they're not, coming from a certain college. The idea is to essentially start building signals in your profile. It could be via content, via networking, via working as an operator, right? It's in an adjacent role in product.
Exactly. Makes a lot of sense.
Right. So I can just changing the narrative of this call, like looking at the other side of the table, right? And you briefly spoke about it, like when you have conversations with founders, right? How do you kind of evaluate them, and what are the factors do you look at? And obviously, I've been on the other side of the table when we have had a conversation for Haldi.club, the matchmaking app where we connected, but I obviously have a sense, but if think of a co-founder or a very early stage, someone is looking at, hey, I want to pitch to VCs. What are the 2, 3 points at an early stage you would evaluate if you can sort of just drill it down? And certain information out there, but at least from your POV.
One, the most important one is having good insights about the industry and the customer and your right to exist and win. Once I think a VC starts going into the second level, third level of questioning, I think it becomes very apparent if an entrepreneur has really spent time understanding the insights about a particular industry. I'd say that would be really something that's very important if for most venture capital funds. Two, I'd say your intensity and your ability to communicate your vision and make the investor believe in the long term vision. There is always a probability of success, and it's the investor's job to assign the probability of success. But if things were to work out, what is the picture that you would paint for an investor to believe is, I think, the second important thing. Third, I think your complementarity and the experience of the co-founding team is obviously something that we look at. But here you'd look at motivations of people, how long they work together, why is it that all of them are interested in building this problem, why are they the right people. If I were to distill it down into two or three at a high level, these would be the really the check marks at the seed pre-series A stage.
Good. So insights on the problem space. Second is essentially being able to craft a vision wherein you have a sense of this is where you want to be in like 2-3 years down the line, and which
Correct.
eventually could change. The third is essentially how the team setup or the structure is essentially. When you say complementary, do you mean having like a tech founder or business founder, or is like because they're like different sort of schools of thought. One is essentially you should have like two different skill sets, and there's a school of thought which says that you might have multiple co-founders, but all of them have to be like jack of all, right? You cannot be like, hey, one
Yeah.
person good at sales, other is tech. Because early stage, you need more techie founders. Like, what do you like believe it in terms of the team structure?
Yeah, I think in our portfolio, what we've seen is typically having one person looking at product and tech who's done this historically, or can do this. I think is very important at the earliest stages. You don't want to outsource that function. Second, I think in terms of complementarity, what is also important is, I think, complementarity in terms of attitudes and outlooks. You don't want to have, in fact, some of the best teams that we've had are people, co-founders who are somewhat dissimilar, but also like are able to align themselves. You need visionaries, you need executioners, you need people who are extremely empathetic, you need people who are extremely ambitious, right? Like, and the mix of this typically really works well, because you need to do everything over 10 years, from hiring to raising money to everything in between.
So I have a question, right? Like, so we have been building PM School for the last almost 4 years, and like I've been reading about playing infinite games, right? So a lot of people in the West, at least, or now in India also, they advise that you be in entrepreneurship for the long term, and that's the essentially the concept of playing infinite games, that you be in it for the long run, right, and figure things out. So how do separate those founders at a very early stage that who are in it for the long term versus maybe someone who could be an opportunist and might not have it in him or her to last for the long run, right? But they
Yeah,
may come from very good background, very good pedigree, work experience, whatever, right?
absolutely. It is, I think that's the crux of the craft of
Correct.
evaluating founders, right? it is
Yeah.
it is a very subjective call. I think what you tend to look at is the amount of work that they've done on that particular problem statement or industry. And I think typically, if, and we saw this in certain markets that were inflated, such as edtech, such as, you will see mushrooming of entrepreneurs. And
Yes.
typically, the best entrepreneurs have really spent time understanding that particular industry or the problem statement that they're trying to solve. And second, have spent time with their co-founders distilling why they want to do this. I think ultimately, while VC fundraising is a milestone and that can be opportunistic, the fate of the business doesn't depend on that, right? The fate of the business ultimately depends on if you're able to serve your customers well, if you're
Correct.
able to serve your end customers well. And people who are razor sharp focused on that are the only ones that are able to build businesses that continue to stand the test
Hmm.
of time. So we're looking for that.
So do you at an early stage ask the co-founders the motivation also behind starting up?
Oh yeah, absolutely. I think it may come in various shapes and forms,
Correct.
but we certainly look for that. We try and understand why that particular problem statement, right? For example, like when I started up, I think the motivation for me, if I were to be very honest, were twofold, right? One, that I really wanted to do entrepreneurship. That may or may not be the right motivation, but for me, that was. Second, I wanted to build in a domain that meant something to me. And, for me, that was sports. I grew up playing sports all my life. The co founders that I played with not only came with complementary skills, but also were people that played with me in, school sports teams. So we knew each other for like 20 years playing together, and we felt like we wanted to solve this problem of access to recreational sporting facilities. So I think there will be motivations which are clearly out there, and you can make those out in conversations with people. Not all of them need to be right. All of them, some of them can be personal, some of them you may agree with, some of them you may not agree with, but ultimately you need to, I think there needs to be alignment between those motivations and how you act, right? Like if you're coming with saying that I want to build something that lasts the test of time, and that is a vision that I have in life, then your conversations with us obviously have to be with that level of ambition and vision, right? And
Correct.
you need to be able to translate that. If you're saying you want to solve this particular problem and you think you align with this, and you think this is a problem that needs to be solved, then we need to see those customer insights, right? And hence there is a mix. There is, like the common parlance is like there is a product market fit, there is a founder market fit
Found a
also,
market. Yeah. Correct.
right? And we're looking for that.
Awesome. Now shifting gears a bit, we want to talk about, how do VCs evaluate products at an early stage, because you might have very less information about the product, or let's say the startup itself. And this, you can separate it from the founders as well. Let's say at an early stage, how do you evaluate products?
Great question. I think I'd love to learn a little bit about this from you guys, and from people who are part of your community. We may not be doing it as well as it should, but I think what in the very initial stages you're really looking for, user love in some sense, right? And you can't measure scale, you can't measure, at least right now, I think the wrong all of us investors have realized that the wrong thing to measure is things like daily active users, monthly active users, etc. I think what you really want to measure is things like user retention, their NPS, qualitative things like what are they saying about the product. For us, if a company has existed for a year, I think retention is something that we look at very closely. We have benchmarks across industries in where we understand what the benchmarks are for D30, D60, D90 retentions. We try and benchmark that against, and this is not to say that an early stage company where the product is very initial should hit those benchmarks, but our founders also aspiring towards that. Is the product built in a way to get to that, is something that we look at very closely. We look at, depending on the domain that you're building in, we try and go deep into usage metrics. How long are actually people using the product? Is that an important metric, etc.? Are they coming back, repeating? So we try and measure user love, and this can have multiple metrics associated with it.
Correct. So let's say if the startup hasn't been there for a year, it's very early, in its stage, maybe 3 or 4 months, they've just built a very scrappy or a sort of an MVP. How do you evaluate products then, right?
Yeah, we evaluate products at that stage with what the founding team is trying to solve for, right? There are industries, let's say arcade games, right, where you're changing like the core of the game. In this case, obviously it is very important that you have really good design and you have a very good game experience, right? Here
Mhm.
we would try and see, have they taken the right steps in that direction. We are not trying to solve for retention at
Correct.
this stage, right? And we are very clear about that this is step one. In other industries, maybe you're trying to solve for, let's say, a fantasy gaming company. It's not, it's not rocket science to build a fantasy gaming company today. What is probably more important is, are they able to build traction and retain users? what does this mean for 1 year, 2 year ARPU for us, right? Which is an important metric in that industry. So I'd say early on in the first 3-4 months, or when the founders are prototyping, it becomes more of an iteration about what are your focus areas, why did you do what you did, if this were fueled with capital, will it get to, or is there a potential line of sight for us to get to some of these things that are important for us in a year's time, 2 years time?
Correct. Now, obviously, VC is not a 0 or 1 thing. You obviously stay connected with the founders and, track their progress as well. If not at 2 or 3 month stage, you might invest, let's say, at a 1 or 2 year stage as well, because that's also early.
Yeah, absolutely. We do that. We do that. I think at least 50% of our investments are that. When we, because ultimately it's not a question answer, session, right? With founders, we are iterating with founders. We are learning with founders. We want to see how they're thinking and how they're executing. It's not about having the right answers. It's about probably moving in the right direction.
Talking about founders reaching out to you, right? And you did speak about traction, and obviously I understand Chiratae looks at early stage funding. Having said that, maybe the VC sort of purview or POV has also evolved from what it was earlier, right? You essentially looked at the market, you looked at the propensity to capture market share, is a saturated category creation, and as you talked about traction as well. Having said that, have you come across pitches wherein founders do really well, or what are the good anecdotes, or if you can share certain memorable experiences from good pitches and compare them to a bad pitch, right? What do founders don't understand, and how do you even pitch? And this is basic 101, right?
I think I could go on and on this, because this is something that we do on a day-to-day basis. I'll try and think of some very apparent things where a lot of the founders sometimes go wrong, right? One, I think, don't try and be too salesy. That's not necessary. I think, while it's important to communicate your vision, I think trying to be too salesy and trying to be too salesy for the sake of it is, I think, not needed. Second, you don't need to have answers to all questions. Sometimes I think this is a misconception that when you're talking to a VC, I think it's absolutely fair to say we don't have that answer, and this is how we're thinking about this, and that's a much better answer, because at the early stage you typically don't have answers to most questions. I think if I were to think of the best pitches, they revolve around the ability to communicate vision grounded in again, insights around that industry, the ability to communicate why you are the right people to do it and why you have the right to exist and win in that category, and ultimately also be pragmatic enough to show the fact that you really want to build a business which will ultimately be measured. Any business will be measured by its EBITDAs, its PATs, etc. And maybe I'm sounding like an investor in a bear market, but I think it's very important to show vision to the unit economics and to say that, hey, we've done this math at this scale, we can easily be unit economics positive. At this scale, it makes sense possibly for us to turn profitable, and at least a thinking around that, to say that. But all of this centered around solving the customer problem. If I were to think of very memorable pitches, I think what comes to mind is a very uncanny pitch made by the founder of this company called Redcliffe Diagnostics, which is a diagnostics company. It's an unsexy market. We didn't think it was a venture fundable market. There are about 10 listed players already, but I think the founders came in with this insight. They had one of them had their own lab. They were experimenting with their own lab with a few things, super specialized tests, general tests, etc. And ultimately, I think the insight was that in outside of tier 1 cities, in tier 2, tier 3 cities, there is a lack of brand. All of your top 10 listed players have a very heavy concentration around the cities because they associate themselves with hospitals which are based in tier 1 cities. Second, I'm just elaborating on this to give you how customer insights actually play out, right? Second, I think at-home diagnostics became common after COVID, which meant that you could build a brand at home, which was a direct-to-consumer diagnostics brand, and that was the change in the industry, which they wanted to capture on. And since we've invested, they've grown nearly 50 times, and I think they convinced us that a traditional industry such as diagnostics can be really venture fundable, and we're seeing the benefits of it.
Awesome. Sakit, I want to move to, I want to ask a question from our perspective as well, from PM School's perspective as well. So back in 2020, when we started PM School, we were just a LinkedIn page and we started getting a lot of traction. And a lot of entrepreneurs around us, they became impatient on our behalf that, hey, why are you not going to the VC to raise money? And at that point of time, we were like, we don't see that, at least in product management education in India. VC money is needed. You can build a good bootstrap company out of it, or at least if you want to raise, maybe 5 or 6 years down the line, when the paying propensity in India increases, then you can raise, right? And retrospectively, we were proven right. But the point is, when is the right time for an entrepreneur to reach out to a VC? More than when is the right time? Like what should be the motivation to reach out to you, let's say on DM, cold DM Saketh, that hey, this is my pitch deck. Can you have a look? And this is what I've made. So what would be the right time, and why should they should reach out to a VC?
That's such a great point you make, right? I think it is very important for entrepreneurs to actually know if they want to raise VC funding or not. I am probably repeating this point, but venture capital funding, and you set a great example by building this into such a good community, and doing such great work without raising VC funding. And I'm sure if you build a good business, like, investors will come your way anyway. But I think the thing is, venture capital isn't a milestone, right? It is a liability that you're taking at the cost of fueling yourself for growth, and a venture capital partner advisor who you can iterate with, work with, which can dramatically increase the odds of your success. Now, what does this mean on when you should reach out to VCs, right? I think at the very least, at the bare minimum, you should be sure of the co-founding team, and you should be sure of the industry that you're building in, and by your insights around that industry and the rate of growth in that industry and how you'll grow, etc. At the very least, right? I think the right time to raise venture capital funding is when you realize that if what I were building is to be fueled, right, there is a clear path for me to grow, and I can see that path, right? There is obviously experimental capital that one can raise at the angel round, etc. But this is specifically, I'm talking of like Series A rounds, right? Like pre-Series A, Series A rounds, $4-5 million of capital for upwards of 10% of equity that you're giving up. I think really the question you should ask yourself is, if I raise this capital and I put it to use, will my company's outcome in the near term be dramatically better and in a sustainable way? Sure, you can get users, but if that's unsustainable, it doesn't make sense, right? Like you were saying, markets, a lot of time markets aren't ready in India, right? Like a similar product that you're building in the US can have a very, very different outcome, right? In India, if you have realized that you're a little early, stay in the game, build it out slowly. And because you've stayed in the game for that long, not only will VC funds be very interested, I think you're setting up yourself for like immense success when you fuel yourself, right? I think it's very important for entrepreneurs. And I say this again and again because a lot of times we are in a bear market today. This will turn around. There will be a bull market. People raise because they can raise. And that results in disappointments, because raising venture capital money is also a liability for you to grow. And you are taking on that liability to some extent. And you should take it up only if you feel like that's dramatically increasing your odds of success.
Got it. No, that makes perfect sense.
Sakit, one last question. We've been sort of firing lads at you, but like just one last one. You've been like obviously in the forefront. A lot of startups must be pitching you left, right, center, right? what is that one emerging trend that you see, and like looking at like this year and next? Obviously, barring Gen AI and AI being the buzzword in the town,
Yeah.
do you see like a specific trend in it could be sector specific, it could be a certain problem space, but considering your POV and
Yeah.
number of startups, what do you
Think
see
of
emerging?
think of think of both Nikunj and I as aspiring entrepreneurs, or let's say the whole Bitsian and the whole community that looking to start up, and they see Saketh, with who can give great insights into what areas we can start on.
Yeah, yeah. No, I think I'll make this twofold. One, because you just pointed out the area of AI. I think it's very my point of view on that is that it's super early. I think there is still we're still a little while away from actually seeing a wide array of startups because of one or two reasons, right? Like one is that really the disruptions in venture capital and startups have come when there have been massive openings in distribution, like it happened with internet, mobile, smartphones, etc. Massive openings of distribution which resulted in massive businesses. I think we are not yet there in AI, at least that's not clear in my head. I think what is clear will get disrupted using AI is probably three industries, right? Your BPOs, which typically operate at gross margins of 30-40%, there is a chance to take that to 70-80%. Digital marketing, I think, there are multiple verticals which can be disrupted. And finally, I think customer service, repeated actions with contextual data, I think you can automate some of these, right? And you can do it in a much more efficient way. I think if we were to talk about industries that are interesting to me, where I see inflection happening, I think a few, right? One, I've spent the last few months thinking about gaming in India and specifically gaming studios that are getting built out of India. I think there is a large potential for gaming studios in India, building for India and for the world. And I think there's immense potential there. There is, I think, a very large potential for you know consumer brands targeting a very niche audience, getting built in, targeting the top 1% of India, so to say. And I think these two are sectors, at least in the recent past, where I've spent a lot of time to understand that there are definitely going to be very large companies built in these two. Over the next 10 years, I think I can vouch for the fact that we'll see at least three, four good companies, very, very large companies in each. And ultimately, I mean, we are also a team, and there are perspectives around the board about multiple other such industries where each of our team members is spending time on. So yeah, happy to iterate if somebody wants to write in. Happy to iterate in any of these.
When you talk about gaming,
Yeah,
could you deep dive here a bit, because both Nikunj and I come from a gaming background. So
sure.
what is the trend which you're saying? Is it real money gaming? Is it casual gaming? Is it like just hyper casual gaming for the Indian market?
The ads model, like the Ludo type of games, or is it like fantasy and rummy,
Rummy
which
and
have
Right.
fundamentally worked in India?
Right. No, I think fantasy models obviously have worked well, but there's some level of concern around the regulatory ecosystem that will anyway settle itself. I think if we look at casual, hyper casual studios that are building, I think the models, there are two basic models, right? Your IAs and IAPs. And across both of these, I think what is possible in gaming studios is you can build for within niche segments, and you can start off with IA revenues. And that means that you can raise seed funding and have like a clear line of visibility for you to build like a certain audience, right? And from there you can try and change the core. You can start off by changing the metas around the game. You can make it extremely engaging, and then you can transition into changing the core and go into IAP revenues. I think some of these are very large opportunities. Just in the last 2 years, if we look at what's happened in casual gaming, right, a company such as Playflux, which has started maybe 3-4 years back, scaled to nearly $100 million of revenue today, is has happened with engaging topical short form reels like content, top of the funnel, to attract users into interesting story-like formats in the game. And I don't see why that cannot be built from India. Just as an example.
Correct. The Playflux is not based out of India.
No, it's not.
Superb, yeah. Thank you, Saketh. We will get
Thank you. Thanks
started working on a game for sure, super early.
Yeah, no, awesome chat, guys. Thanks so much for having me here. And all the best to PM School and the entire community.
Thanks a lot.